Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Well, taking a look at oil, it has been going up, I would say, the past week, ever since, again, OPEC and Russia said that they would consider extending their freeze at their current, what were production highs, for another few months, or at least 6 months, I think.
Yeah, crude oil's been on a tear. It had that big reversal there in early May, rallied up, consolidated in a nice bullish formation, a bull flag, and it broke out, I think it was on Friday, it broke out and popped to the upside, and it's moving up. I've got an upward target. I've got a couple of different ways to come to different target prices, but I've got an upward target of $52 per barrel. Today on the continuous contract, we're trading at $51.44. And I have both a technical Fibonacci extension level, which gives us an upside target of how much power and momentum should be behind this move. And we've got another about 50 cents a barrel to the upside. And I also have cycle analysis showing that we are coming into a potential cycle top here in the next 3 or 4 days, that we could easily see the market kind of roll over and head down. And, the timing seems to be impeccable with the U.S. dollar having a big washout low, falling down to multi-month support levels from early last year, that we're starting to see a bounce in the dollar today right off this level. It pretty much hit it right on the nose. And, we're starting to see the more sensitive commodities like precious metals see a little weakness, especially gold miners today, with the bounce in the dollar. So I think we're very close to a tipping point for crude oil to roll over and more or less have another slide down to test potentially the recent lows down near the 44, 43, or potentially go even lower. But I think most of the upside here is done at this point for this rally in crude oil.
There's word the U.S. wants to sell off half of its strategic reserve of oil. How's that going to affect the market? Yeah,
I'm not sure how that'll affect it. Obviously, if they want to sell off oil, that definitely could add some downside pressure to the market, and it would coincide with kind of the technical analysis showing that we're close to a top. It's a great price, in my opinion. If you wanted to unload, you might as well unload it after a 15-day more or less rally into resistance. This is the place to do it. So, not that they'd be probably that timely, but news like that could start to build some anxiousness for people to close out their longs, to maybe go short, which would force the market to roll over and sell off.
When we had that big plunge in oil, the Saudis were shorting oil like crazy. Any evidence of that happening right now?
I don't really follow, excuse me, the short side of what individuals are doing or groups in terms of big positions, but if there's a lot of shorts in there, they've been probably getting squeezed out here the last week or two as the price keeps rallying up. And once price starts to fall, that's when you see a lot of shorts get on the bandwagon. And that big washout low we saw a couple weeks ago in crude oil, that's the type of price action where everyone finally gives up and they get short, and they really create that big washout low, big 2-day drop and snapback reversal. And that's usually the time when everybody starts to go short. And that's why we see huge volume and we see big price action. We typically don't see people shorting up after a multi-week rally. I think more of the technical analysts who are watching price are starting to be like, okay, well, this is looking overdone to the upside. Now is the time to potentially start lagging into a short position or an inverse ETF that will rise in value as the crude oil price falls over the next potentially 15 or 30 days here.
Now, one thing that's affecting the consumption of oil is the fact that although people have been buying SUVs like crazy, the new models are very fuel efficient and aren't using the kind of gas that they would have been using, say, even just a few years ago.
For sure, I think it's a big thing. It's obviously efficient cars require a lot less oil and burn less fuel, and it does play a huge role, especially a big amount of crude oil not being used in fuel in general. There's so many cars around the world. Obviously, not every country has the standards like we have in North America, but of course we're a huge consumer, so it'll definitely make a big difference. And that could be, one of the big reasons why you look at the crude oil chart and you go way back in time. There could be a reason why maybe we could linger down in this area for quite some time. If you go back and look all the way back to 2001, we're trading back at a significant, more or less pivot low, but an area that we could actually potentially trade down here for an extended period of time, potentially another year or so before it could actually find a new direction. So overall, I'm more or less neutral on crude oil. Looking forward several months, I kind of feel as though it's going to oscillate between that 54 and potentially 43, somewhere in there. And we're kind of right in the middle of the range at resistance, the short-term resistance range at this point. So nothing too significant for crude oil in terms of huge moves. I think, we're going to be lingering down this lower end of the range, and I don't think we're going to see a real breakout above 60 and a huge run up into the 80s for quite some time.
Well, maybe the writing's on the wall. Volvo says it has designed its last diesel engine because the emission standards for 2020, although Trump has canceled the Obama emission standards for 2020, the rest of the world still probably wants to follow those rules. So it says it's designed its last diesel engine. From now on, it'll be designing hybrid engines or electrics.
Yeah, I feel as though that's kind of going to be a big way to go, is the hybrid and electric going forward in the future, especially with all the renewable energy, with wind and solar. There's so much potential. Obviously, we're still behind in where it can be, but massive potential for these hybrid cars, and it could definitely put a massive stranglehold on crude oil and demand for it. If we were to look forward 5 years, big potential change.
Well, there's some days in California now, half their power comes from solar.
Right, yeah, exactly. And that's a massive state. Like, it's the size of Canada.
Well, it's more than Canada.
Wise.
Yeah, it's more than Canada.
Yeah, exactly. It's amazing to think that can take place. There's huge potential. Like Elon Musk and his whole solar city and creating those couple sections, those big areas of acreage I think it's a brilliant idea. I think it's amazing. And to think where electric cars and things are coming along as well. We're really changing. It's amazing when, who's the guy that does the environmental stuff? Who says the world was going to end. We're past the tipping point. The environment is going to collapse, more or less.
Suzuki.
Yes. So, it's funny. It's amazing how people are, though. Usually we're a little slow to catch on, but when humans as a group decide on something, it's amazing how much headway and traction they can get and make huge moves. And I think in the next 5-10 years, the whole solar and the wind thing is going to really start to explode and take off. And we could potentially make up for any lost ground that we have with the environment. But, I don't know the details into how much pollution there is created for wind, solar, and those two energy sources in terms of creating the products to make it happen. But it sure looks good from the outside.
And in BC, totally unexploited tidal power. Because of Vancouver Island, the tides along the BC coast are at different times for peaks and ebbs. So you could actually put the stations far enough apart that you wouldn't have, any decrease in power.
Yeah, you could have a constant draw coming from somewhere.
Yes.
Yeah.
We'll have more with Chris Vermeulen right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Chris Vermeulen. What's the picture for gold and silver right now?
Yeah, gold and silver and even miners, they all move together more or less. They've got a pretty unique kind of pattern that's setting up here, depending on how you want to look at price targets for where they're headed. Gold is more or less trading at a measured move from a recent kind of the low that it put in a consolidation. So gold and gold miners have a very similar pattern, and there's a potential here that we might see one. I have a feeling we're going to see a final pop or maybe a little squeeze higher in gold, bringing it up to 1270, maybe 1275. And then I think we could see a pretty sharp reversal to the downside in precious metals. The chart, you look back on the overall pattern going back to 2017, we've got it's like a saw blade tooth going up, very bullish price action. And we're at the point here where cycle analysis is showing that we put in the top and we're actually starting to go down the other side of the round, more or less saw blade. And I think we've got one final squeeze up, and we're going to hit these resistance levels. And then I think we could see a pretty strong wave of selling across gold, silver, and miners, which, again, bodes really well with what we talked about a minute ago with the U.S. dollar index being oversold at support, long-term support zone. And it looks as though the U.S. dollar has kind of slipped really quickly and is having a washout type of low, meaning everyone's kind of panicking out of the dollar. And that's usually the sign that we're right near a sharp reversal bottom for the dollar. And if the dollar does find support and starts a knee-jerk reaction rally, that's going to create a very sharp sell-off in precious metals. So in the grand scheme of things, crude oil, gold, and silver are all looking like they're almost done these bounces to the upside, and I think we're going to see a lower low put in after this, and we could see gold dip back down to the 1,200 or potentially even lower than that looking forward.
So is this a time to wait and see what happens with gold before getting more into the market?
I think it is, yeah. The recent kind of bottoming formation we had a couple of weeks ago, we did get long in silver using SLV. We had that sharp, quick 3-4 day pop there. We got out of it because it came right up near resistance, and silver is continuing that upward momentum. And I've got silver on the upside. It's currently trading at 17.15 right now, and I've got 17.40, which is not much higher, as being the measured move target, that if it hits that level, I think the sellers are going to step in and we could see a pretty strong move to the downside. So right now, I am sitting in cash waiting for more or less these short-term cycles and for a reversal type of candle or price action to form, because I actually am more interested in shorting or buying an inverse ETF on the precious metals, potentially getting long the dollar and taking advantage of potential pullback in these markets.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, of course, the loose cannon on everybody's deck is Donald Trump. Are the potential scandals surrounding him going to affect the markets greatly? And what about his proposed tax cuts? Will they ever happen?
Yeah, obviously, I think there's a lot of fear still creeping around what's going on with the scandals and how they're going to shake out and play out. And I definitely put some worry into the markets. And, we can still see worry in the markets, even though the equities market has put in a really strong rally the past 4 trading sessions. We're still seeing money moving into some of the safe havens, specifically like bonds and utilities. And those are the two that I find really capture the sentiment of kind of the long-term, slow-moving investor. So right now there is still, the average investor is nervous, they're fearful, they're moving into the really boring investments, bonds and utilities. And so that goes to show us that there is fear in the market. Looking at a short-term trader, I don't think it has a whole lot of effect to them. Obviously, it can shake the market for a day or two, news like that when it rolls out. But I think the average investor is worried, but short-term traders don't really care that much. And we saw a huge move last week, the big sell-off in the equities market, and we saw major panic in the market. The VIX jumped 48% in one day, and when I was looking at the NYSE volume ratios, I saw a spike up to 9 at one point in the morning, meaning there was 9 shares being sold by investors to every 1 share being bought. And whenever that ratio is over 3, so 3 shares being sold to 1 being bought, I consider that to be panic. So it's like a 3-to-1 ratio. So the fact that we had a 9-to-1 ratio, that anytime the ratio is over 8, in my opinion, we usually find a significant intermediate low in the stock market. And that was last week, and everything spiked, fear, volume, investors really got shaken up. And I think that news was enough to kind of cleanse the market, and, we've muscled our way right back near the highs, the all-time highs here in the S&P 500, and I think we're very close here to just continuing to break out and move even higher. And I think that big down day was enough to get the short-term traders out, and kind of reset the market in terms of positions going forward. So there's new people holding fresh shares at these lofty prices as opposed to those traders who have been buying and holding positions waiting for price to go up. So shares have gone from position of weak hands to positions of strong hands that are intending to hold their shares and stocks for a longer period of time.
Of course, we have the so-called FANGs and their friends. It seems to me perhaps the best bets there are the ones who actually make products, like Amazon. They deal with physical goods, Microsoft, but your Netflix and Google's now they're producing movies and so on. They have physical product. Is that going to be the difference, the ones that have something to sell versus just advertising space?
Oh, for sure, yeah. The FANG stocks, they kind of really run what's going on in the equities market. They've got so much power behind them in terms of market share that when they move the entire market. So obviously the leading stocks, the leading companies that actually that not only have a service like Netflix, but also can create products. Like, Google is really a well-rounded company. They kind of do everything. They've got services, marketing, you name it. They got products. They got the whole kind of thing covered. So they're a rock solid, in my opinion, type of company that's always looking forward, looking for the newest thing. And those are the companies I think that are going to continue to lead the way. And they've been moving up, and they just continue to keep moving up more or less year after year. So those are definitely leading companies. And they're kind of the new type of, Procter & Gamble, P&G company. Maybe not so much on the food side of things, but I mean, these tech companies are well-rounded in everything but food.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, his website, thegoldanoilguy.com. You're listening to HowStreet.com radio. Of Questions for us or our guests can be sent to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.